Good evening, everybody. Now, again, do apologize for the slight delay this evening. I've had a pretty bad migraine all day, so just wanted to get a bit of rest before jumping onto the charts and hopefully providing a very valuable video for you all. So for this actual video, I will be doing some altcoins maybe tomorrow or the day after. However, for this video in particular, I want to focus on Bitcoin overall in particular and the actual overall market trend. Now, as I'm working on this course and I'm working through several chapters in the books, it has actually re-instigated several thoughts and ideologies in my own head that I feel like I should be sharing. So specific topics I have been covering in the course, I feel like why not actually discuss that right now and get an overall outlook of BTC. So what you're looking at is right now, I've completely stripped the BTC chart clean. So we are going to pretty much analyze this chart from scratch, from fresh. We're going to look at all of the time frames, doing a multi-time frame and top-down analysis as well. Then on top of that, we're going to dictate all of the possible outcomes and scenarios of where this market could be heading next. And I'll also be sharing some of my own ideas, some of my own thoughts, some of the thoughts I've been sharing for maybe almost 2 years now, but there is a new audience here as well. So I would like to express this to every single person and kind of see if you guys agree, if you guys don't agree, and if not, again, please leave comments ASAP in those YouTube comments. We can have some discussions as well. There's already a big discussion going on Twitter. I went on a little rampage for all of you. So let's get straight into it. But before that, getting straight into it, I will just discuss this. Within 1 day of surging, BTC's dominance is almost back at 51% from a 50.2% figure only a day prior. So very interesting to see. Again, some of the biggest gainers today, Bitcoin Cash, pretty impressive to see. Cardano, now again, I've had a few messages regarding Cardano because it has outperformed ever so slightly the rest of the market alongside BCH, but this does not mean it's suddenly a more optimal coin. Same goes for EOS or EOS, however you guys like to announce it, or Litecoin. Just because they've risen slightly more, it doesn't mean they are significantly better. It just seems to be either the price they're currently at or several other external factors, but it does not mean the crypto is suddenly a better option. So never get sucked into the hype of just getting excited because a coin has pumped. Now, disregarding Yahoo Finance, I have just stumbled across a very interesting website. It's called CryptoBubbles.net. So if you actually click and drag, it does take a while. You can move these around, you can click on them, and it's actually a pretty cool little tool. I found it on Reddit, someone posted it, and again, the size of the bubble represents the dominance in market cap and overall trading volume. If you click them, pretty cool again. 0.20%, you can see the hour, daily, and weekly gain, and it's actually a good way of gauging the overall market bias, and the same way you would analyze charts. So I'm actually going to start using this as an easy way to see what's currently dominating the market and playing the biggest role. You've got the stable coins lingering about, you've got USDC over there as well, you've got Doge, good old Dogecoin, and you've got all the others as well, Stratis, all those stuff lingering, Quantum, and Neo's good. I forgot about Neo. It's been a while actually analyzing Neo properly. However, a great coin. I will still stick to Neo to the death for the time being. They have not done anything faulty, and I do still believe in the Neo project. Many of you have been asking me about that as well, and yes, I do still believe in Neo. In particular, this little gem here lurking in the corner, ARK, very low-key underlying sleeping dragon, and I do believe there's going to be some big updates. I really respect ARK actually, although we should be jumping into BTC. I do respect ARK because they're very low-key with their announcements. Again, one of the reasons I hate, where has it gone? The dreaded Tron. There it is, TRX. The reason I do not like Tron isn't actually because of the business model itself in particular, but more so because of how Justin Sun just overhypes the living shit out of everything. That really does put me off the investment side of the company and the professionalism, etc. But one thing I like about ARK is they're very low-key. They get the job done. They announce the roadmap's been completed by an extra stage, and they carry on working on the products. There's no overhype. There's no crazy giveaways, all that stuff. Just a very raw, genuine product. So let's go to the BTC chart right now and have a little look at what's going on here. So this is the daily time frame. Now, first of all, the lesson I was actually covering in the book was a segment on identifying trends, higher highs, higher lows, swing highs, swing lows. Now, overall gauging this market from scratch, let's just draw a massive resistance level here, just covering approximately where this major region was. So now that I'm looking at it, and the reason I got out yesterday, 50% of my position, yes, stop loss got hit, not really too fussed. The reason I gave you guys the heads up, because it just didn't seem too right. You know, that underlying Coinbase news, it did feel like there was going to be a pump of some sorts. And the best thing is, many of you took the initiative to actually enter long. I caught a quick scalp earlier with a quick short from this region down to there. I wouldn't really recommend anybody doing that. I know I posted the profits, however, I wouldn't really recommend anybody doing that. I'm now out that position and I'm not ready to enter again. It's very risky to be trading in this territory. So once we've actually gauged this overall market bias, we can dig a little deeper into what could potentially be some intraday setups as well. But I want to focus more on the long term for the time being. Many of you are projecting and telling me to project some more long-term targets, so we can do that as well. But the first thing you'll notice is, besides the trend lines over here, the market was slowly inclining. We did see some fake breakouts, as you could see. We managed to catch that nice short from there, broke through, did see the retest on the intraday timeframes as well, but we did absolutely rocket through. So overall, what people were looking at from this daily perspective was the inclining climb. So if I just mark these and duplicate these all here. So as you can see, we've been making very consistent higher lows on this chart. So many people have been looking at this and obviously seeing some form of upside bullish breakout pending, and we all did. I was anticipating hopefully a nice downside push before this happened. However, unfortunately, we did see the rise very early, and according to the news articles and reports, I've been digging a little deeper into why it actually surged today, and they are saying it's because of well, I guess you could say fat finger, as people call it, someone who had $100 million Bitcoin buy or something. I don't really buy into that stuff too much, as that's what many outlets seem to cover whenever something goes extraordinarily crazy, I guess you could say. So I'm not too sure if that's the truth right now. It does seem very orchestrated for someone to accidentally buy 100 mils worth of Bitcoin and it precisely goes to 5,100 and drops. It's a very random and precise number to be rising to before falling. So something to take into consideration. But let's actually go to this current daily price action right now and look at this. So on this time frame here, we've been fluctuating around the resistance of around 4,200 on the daily. However, the lower lows, I guess you could say, were no longer. So from this region here, and I'll duplicate that as well, we were in a trend which I'll be getting into shortly. However, we started inclining those lows, making higher lows every single time on the swings. And again, if you do not know what swing highs and swing lows are, they are points which have caused significant turning or reversal points in the market. For example, there. Yeah, I could go all day long. I hope you guys get the gist. But what we've been looking at is overall a fairly intraday market that's been rising. However, now that we've annihilated this, the reason I've actually made this video is because this is just a 15% bullish candle. I mean, a quick duplication of this over here shouldn't be too different to what you've seen here. It's actually smaller, guys, than the bullish surge we saw here on the around 16th of December, surging from approximately 3,300 all the way up to, at its peak, 4,300. So a complete $1,000 rise in pretty much 2-3 days did occur from this region, and people are starting to become irrational again. They're seeing these movements again, similar movements from here to there, very similar movement, all in the same range bounds. All of these explosions on BTC, when they are big manipulated candles, they're normally exceeding a perspective of around $1,000. So what you're seeing here is another $1,000 move. It's nothing too extraordinary, and it is not unacceptable, I guess you could say, to consider that it may change the trend. However, let's zoom out and clear these lines, because I want to go from the very top and start from the beginning and show my real bias on this market. So first of all, look at this. Looks great. Looks like it's rising. Huge surge. Seen a similar movement there, by the way. Now we go to the monthly time frame. Well, hold on a minute. What's going on here? Very, very small in perspective of the overall picture. And this is what I've been trying to drill into many people's heads. So we have this current bullish movement momentum from pretty much January. We have seen a nice shift in movement. That's great. However, what have we been in for approximately 16 months, guys? We are still in a bear market, and I've been trying to stress this for so long. Looking at this tiny little movement, putting it into perspective of what was a huge, absolutely huge bearish market and a bearish reversal from around $20,000, give or take, what you are looking at now is an absolute tadpole in a very large pond compared to what is occurring in the real world. So what we're going to do is we're going to break this down properly, have a little look at the overall trend, and have a look at where we could be heading very soon. So again, for anyone that's new here, I've been covering this for a while. When BTC dropped below 6,000, it was highly doubted. However, it did occur, and it has shown me that you cannot look at these huge movements here, because when BTC was lingering on the weekly time frame, let's go to, when BTC was lingering here around 6,000 and bouncing up and down, many people were claiming from these huge surges from 6,000 up to $8,500. People were saying, well, you said it's going to go down. You said it's going to go down. Well, yeah, it did, but it comes with patience, and on a weekly perspective, this is no different. Even if you see these huge momentum swings, we have to look at the overall picture, and we will get to that shortly. But first of all, let's have a look at the main trend to gauge what we are doing right now. So first of all, we get the arrow tool. We are currently in a bear market. Now, looking at where we currently are, there is a slight level of support here, where this wick and this wick correlated around $3,000 and pretty much precisely at the $3,000 mark. Now, if you want to consider this a retest, you can. However, I do not really believe this qualifies as a retest, as it was around $250 short of actually meeting this region. Dropping down to the weekly, you can see here, bang, resistance, broke through, broke out, tapped again before absolutely exploding. That validates a very crucial region of support we are currently underlying from. Now, we will draw this ready in advance so I do not forget. What we currently have here is a trend line forming as well. And technically, if you want me to be extra cheeky with these trend lines, we do have another counter trend forming as well against the overall trend. Let's look at the patterns of what BTC does overall from a longer term perspective. Counter trend with the BTC, the trend line there floating. Again, if you want the cheating counter trend as well, you can obviously do that. I do not really consider that a real trend line. However, let's leave it there for theory's sake as well. Let's now go to this one here. I could actually extend that from there realistically. Let's drop that there. If you really want, you can also drop it from there as well and have another fake counter trend line. So another counter trend. And if you want to be even more cheeky, another counter trend technically, if you're going from wicks to wicks. And remember, with crypto, it is best to stick to the wicks, because with so much manipulation that occurs, it is ideal to stick to the wicks, because when these manipulative spikes actually breach a major level of support and resistance, if you are drawing your trend lines in this cheating way like this, or your counter trend lines, what will likely happen is price will spike to the actual external trend line and completely wipe you out. So that's why I do not use these cheating ones, because these little spikes in the world of crypto are much more significant than you actually think. Now, if I keep this there as well, you could say that was also a counter trend on the weekly. You could also say this was a counter trend. We'll draw it from there. And you could pretty much say that was a counter trend as well. However, we will not consider that from there. Now, what you can see overall, although it's messy just for purpose and demonstration's sake, is there are counter trends galore from the overall larger picture. Every single time we drop, we are forming a new floor, a new level of movement, and then we absolutely drop to the ground. It's always a huge rally and then a huge pullback. Now, if you notice, let's clear all these drawing tools again. Actually, no, we need to keep some of these levels. So we'll get rid of the mess, and we will now focus on the overall picture and something I covered in the beginning of this video. Guys, what is occurring right now? We have the peak of the bull run. We then pulled back. What do we have here? A lower high. What do we have down here? Technically, a lower high. And again, a lower high. And again, another lower high. And as you can see, every single time we see one of these surges, if you want to consider that, yes, but that was just false. That's not real price action right there personally. Now, if we actually use this ideally as even just a little accurate projection, let's have a look at what price has been doing. Every single time a huge movement to the upside has occurred, it has not broken the prior high. So to invalidate and a bearish market and to consider ourselves in a bullish market, we need to be breaching one of the last real swing highs, which is realistically for me around this level here of around $8,000. Give or take from this level as well, you've got the spike here around $7,800. For me personally, until we break this level here and wipe out the prior swing high, the real swing high, not the mini one, the real swing high, we are not in a valid bullish market. And that's why I do not care if this rallies up to 6,000 and beyond, because I will not get excited, because the overall picture is making it very clear. Now, if If I get rid of this for 1 second, and just using the common law of higher highs and higher lows, again, the bull market, higher highs, higher lows, forming themselves every single time. The minute we wiped out the last real swing high, which was around, well, swing low, around this region here, the new higher high that was formed and the new higher low that was formed, once this level, and if I drop down to the daily, good example of what deactivated, I guess you could say, the bull run. So we had the swing low here. Now we had one there as well. Huge bull run, pulled back, we've now pulled up. Now what's happened when we've pulled up? When we've pulled up this time, we haven't breached this level once again, now showing what is an alarming sign of what could be a potential reversal. Now taking that into consideration, what else has happened? The last swing low was here. We've now formed a new swing low here. We've pulled up. We now have a lower high and a lower low. Two major warning signs that the market may not have the momentum anymore to breach past this $20,000 region, or $18,000 region more precisely. Price then dipped back lower. What did it do? It made another lower low from this one. Now confirming, once we see our final push higher, what could be a very significant market reversal and change of trend. Now, we breached past this high, but guess what? We still have not breached the prior higher high. Now confirming there is no more market momentum. What happens from there? Now, because we're on the daily, this is where it gets really easy. Counter trend. And again, counter trend, and again, counter trend, and again, counter trend. Let's make that proper. Just cheating for now, but I'm just showing you overall what's really going on. Every single time in this market, counter trend. Technically, that is a slightly inclining counter trend. What's been happening when that broke? It breaks again. So all you're really seeing here is a major reoccurring theme. And looking at this now, when you actually zoom out into a bigger perspective, yes, we can significantly pump to this region, but guess what? All of this zone here has to be breached to invalidate a very similar thesis over here, because just like how we failed to break this region on BTC during the bull run, we then significantly dumped lower. And the same way we've seen major rallies from the likes of $6,000 to $10,000, but because we did not surpass the prior swing highs, we have not considered ourselves in a major bullish market just yet. And yes, even when I call these bullish calls in a intraday or intraday perspective, it does not mean I'm correlating this with the overall market bias, because we are still in a bearish market. Now, taking this level into consideration and taking into consideration what's already been discussed, I'll leave this open for discussion here. Very similar movement. 1, 2, there was a third bounce, spiked, dropped through, broken. Could be a very similar circumstance over here, a spike higher, and I'll get to the 6,000 region now as well. So let's just say this hasn't been broken just yet. We haven't reached this level. We're now going to start breaching higher. First of all, it's getting late over here. Let's just get rid of this for a second. Clean this up a bit more. I want to keep this as clean as possible, but at the same time, provide as much actual data and diagrams as possible to really let this sink in on what is occurring in this market right now. So if I go to the weekly perspective, looking at the $6,000 region where we broke from, have we seen this $6,000 region since we broke out below it? No, we haven't. We absolutely have not seen this region since. We broke below, we smashed through this floor, but it hasn't been retested as resistance to confirm this is going to hold as a major level. Now, although I do not believe we will actually reach this region right now, it is very possible considering this huge upside breakout we've just witnessed. Now, taking this into consideration, this is again all of these long-term perspective. This is not an intraday perspective. I'm not talking intraday, I'm not talking day trading, I'm talking overall market bias long-term. I'm not going to say it would take a week or two, it could take a month, this could happen till the end of the year, but I do believe, and I'll get to that in a second, Bitcoin could eventually fall straight through the $3,000 region, straight to this prior level here, around $2,000, and then finalize around that $1,300 to $200 region just there. The last real spike. Now, bearing in mind, this was when Bitcoin saw its first ever downside plummets after its first ever bull run. I believe this was due to the Mount Gox scenario that did cause one of the biggest reversals ever in the market we saw at the time. And again, if you actually look at this region right here now, it's not really any different to what's now this region on a much larger scale. So if you have a look at this and how it's rising, it's not really any different. So all we're seeing right now is a significant pump, maybe like this, to retest. Again, I know it's going to get a bit messy, but I'm just doing this for demonstration purposes. Very similar movement. We're broken below $6,000 there. Let's say, hypothetically, this is $6,000 there as well. We've basically swerved at a pretty random level. Look at this. Spike there. Price has now dropped. Price drops there as well. Huge spike. That's why I was predicting a downside spike first. We've now pulled up. We've retested this region the same way we could potentially retest this region. And we've slowly but surely dipped all the way back down. Again, as you can see, all the way back down, we've slowly but surely dipped. This could very easily be a similar scenario. Now, looking at where this spike dropped to, we dipped down to approximately where the last spike was, which is now this region. So this is technically where this is right now. We dipped all the way down, pretty much correlating exactly with that level before pulling higher. Now, zooming out of this, getting rid of this. I do believe, with all of this in mind right now, plus if we use a Fibonacci tool, this could help in our favor. Let's draw it from here. First of all, where do we line up? Well, that's pretty frightening to see, isn't it? Because the 61.8 lines up almost identical and precisely with $6,000. Just above, identical to this region here, a very valid level of support and resistance, if I may add. We have the 78.6 fib, around $6,834. Now, taking these two levels into consideration, great. Where do the extensions line up? Well, guys, precisely on $2,000. It cannot get more precise than that. Below there, we have $400. Now, I do not believe it will really see that kind of level. However, when you think about it, if it does spike to 1,200, it could see a very sharp spike and reverse from there as well. But if we pull this a little higher as well, let's see how this plays out even further. So as you can see right now, it doesn't really make too much sense. Again, minus 35, I do not think so. However, when you drop it to that manipulative spike, it does kind of make sense. And if you go to the monthly time frame, let's just drop this here and we drag this all the way back to, I believe it was the body. There we go. So if we drag it to the body as well, we can have a little play with both scenarios and see how they work out. You can see they don't really add up as well as the actual theory of spiking it just a bit more precisely from the wick to the wick. So this is one of the reasonings behind this move as well, because we have significantly surged from this region, taking the Fibonacci levels into consideration. There is a huge region here, which we will now remove this from, and we will extend this over to here. And what we will do is we will change the color to the wizard purple. We will now take this into consideration up here, nice and clean, nice and simple. We'll make that dark. What the hell just happened there? There we go. We'll keep this region in mind now as a region which needs to be broken to actually consider a bull run to occur, because low. Where did price surge to today as well? Let's get that trend line out. Was it this trend line? Or was it this one? I think it was this one. There we go. So using that in theory right now as well, let's just get rid of this, not necessary for right now. 1, 2, 3 tests of the overall major trend line, because remember, people do like to cheat and consider it here or there or breakout, and yeah, technically broke out, retested, bang. However, when there is a further wick, as I said, we need to take these wicks into consideration. When the trend line extends itself, or when a new high is formed or a new low, we extend the trend line out to that valid level, because if you were leaving it here right now, you wouldn't have realized that there is a key level right here in play. Price spiked, the weekly candles now rejecting this region. Let's have a look at the daily time frame and see what's occurring, resting precisely on that weekly trend line. Now going to the 4 hour, God, there is some consolidation if I've ever seen some. So as of now, to be honest with you, I'm not too certain myself if it will rocket through or reverse. I'm not too keen until I see a clear break or a clear pullback from this region to further confirm. We also have to take into consideration this major level here of resistance, which has just been broken. It could pull back and now absolutely rocket to this region. However, taking this all into consideration, we need to focus on the overall long-term image here and using the theory of the higher highs and higher lows. Guys, let's just say the price projection for this, let's change that to red once again, and let's just say, let's duplicate all of these just for visibility, keep it nice and clean for you guys so you can understand where I'm coming from. So if price even spikes to that Fibonacci level over there, let's just say here, well, it's still a lower high. even if it breaches up here, you've got the wick there. Guess what? This level is now here to be broken. So theoretically, the 6,000 level is not only needing to be retested, something I've been covering for maybe well over a year now since we actually broke through that level. October 2018, okay, less than a year, but I have been covering it since we broke through that level. I believe I was in Maldives when this happened, and many of you would have remembered when on IG Live we covered this as well. I did say it needed to be retested, but it does not mean it will not fall lower. Using the Fibonacci extensions as a good bias of where we could be heading, guys, dragging this higher. This concerns me. This is why I'm so scared. Well, not scared, but this is why I'm not really getting excited yet until I see a significant retest. Because what kind of scares me that people are not realizing right now is taking these levels out of consideration for 1 second. If we break through this level here, the current support level we've bounced from, approximately $3,500, give or take, around that level. What is really below this level? If we just take a look for 1 second, what is below this level? And by the way, once this expands itself out, if it does cause a significant reversal, this becomes the new trend line and we disregard this. So what we can do right now is, although it's precise, if this started breaking higher to there, all we would do is extend the trend line up like that. Using a solid projection and a overall projection with the Fibonacci's, you could say very soon there could be a trend line occurrence around here. So we will leave that in the open like that to look like that for now. But here's what concerns me, guys. A break below this level. Look at the gap. Pretty much $1,000 to $3,500. We essentially have a $2,500 drop ahead of us should we break below this region. Look at it. Again, looking at these levels here, they are insignificant because they were not sufficient. This right here was the key bull run and the key reversal point. And this level, the same way we haven't retested $6,000 yet, we also have not retested this level yet since breaking out to the upside. So it would make sense with a fairly sufficient estimate to see that we could essentially fall down to this level first, correct? Just how we've done here on the weekly. Just how you've seen it here. We pulled all the way back, slowly but surely, retested just there. And then we reverse. Now we're seeing it on a much grander scale, essentially. As you can see, there's a channel breaking out. We're now doing the same. We're now going to hopefully see a pullback to here after retesting this region, crawling to around $1,200, give or take, even $1,000, huge round number. I can see a psychological level. And bearing in mind, with CME futures in the market actually having such a substantial impact on the market and so much price suppression, it does not seem like the market is ready to move. And using this as a good look of perspective, a move like this, let's have a look at these moves here. Not much different to these moves. There you go. Exactly that move there in terms of size from this low to the $6,000 Fibonacci retracement and trendline level is exactly the same as this, but it does not mean there's a bull run. We are so enticed in looking at these 4-hour and daily time frames, we do not look at the overall image. And I do believe even if we do not succeed, I mean, looking at this level here and looking at this movement, it does actually look like $6,000 is going to become a reality with this momentum. Huge reversal, huge breakout, could see a final push like that to maybe tap this level. A lot of volatility, of course, but overall, this is exactly the same size of movement that this could potentially be to this region, and extending this over to there, that was even bigger. But as you can see, over time, these movements are getting slightly smaller and the retracements are getting a little bit shorter. But again, matching that with that, let's drag that over there, approximately precisely $6,000. There are so many confluences occurring, but we're just so enticed right now in these shorter time frames like the intraday, we're forgetting to see that the market still has so much room to fall, and it could not be more bearish if we tried. And again, it does make sense if we actually spiked and hit this level, and eventually from there we started crawling. I do believe with the Bitcoin halvening and all that stuff that will be occurring in 2020 around May. My birthday is May the 5th, guys. So the way I'm thinking this is actually the universe working potentially in my favor for my birthday. It's how I view it. So essentially, May 2020 is when we could be seeing what should be the next potential bullish breakout. But in that meantime, for the remainder of the year, I still believe by the end of the year to kickstart this bull run. Again, think as an institution, think as a bank, think as a government. Where will you be buying from? Will you be buying here? Or will you be buying there at $1,000 where it's more profitable? And there is this argument that why would they do that? Why would they let the average person have the opportunity to buy at those prices? Well, I'll tell you what we can do. If we go to Twitter and we have a look at this the ever so famous psychological cheat sheet, the best part is anger, depression. What phases those? My retirement money is lost. How can we pay for all this new stuff? I am an idiot. Who shorted the market? Why did the government allow this to happen? Although I think this is absolute bullshit, in all honesty, if you actually use this in terms of a psychological outlook on the crypto market, once price starts dipping to those levels, all you will see is news articles saying the end of cryptocurrency, the end of this, the end of that. But the genuine person who has done the research in the market and understands market cycles knows that Bitcoin could very well fall to $1,000 and it would not change the market dynamics. You are seeing more growth and development than ever, but yet seeing such significant swings in prices seems to be the dictator of how well this market is doing, when in reality the fundamentals are far outgrown the actual technicals right now. So we have a lot of catching up to do. I do believe if I was a banker, I would be buying my 500 million BTC worth at this region here. Because why would you buy it at $5,000 or $3,500? It doesn't really make logical sense to me. And it's been something I've been trying to process for a while. If you remember when we were at these regions, everybody was saying this was the floor, this was the floor. But I wasn't looking at it even from a technical perspective because I knew it would break anyway. I was looking at it at a institutional level. I'm thinking, why on earth would I buy Bitcoin at $6,000 when I know CME futures has caused such a significant movement? And bearing in mind the exchange volumes for most unregulated exchanges are being faked. So when you consider that CME futures is the biggest dictator of the market right now alongside USDT and USDC. USDC, by the way, is also known for pumping the market right now. A huge amount of artificial money. This is no different to the Federal Reserve and quantitative easing. This is no different to just printing US dollars all day long to, I guess you could say, stimulate the economy. They're essentially printing false tethers and USDC all day long to artificially inflate the market. And when you consider that, this entire market is run by either that or the futures, which is Wall Street and the government, and technically the banks, combined to some insider trading extent. You can see that if we are playing the market and we are being controlled by their agenda, then we are going to likely see this market unfold how it would do in their normal agenda, which is absolutely demolish price and then get to that despair phase where everyone's just panicking and shitting a brick, and then you absolutely pump the market. So again, I believe this will be a very slow decline. I believe we could be seeing this region. We will very slowly but surely dip down to this level, accumulate, and guess what happens when we get to 2020? Boom. I believe we will absolutely explode around 2020 May, where the halvening will occur, and I believe many other external factors, which I will be making a video on very soon as well, can be coming into play. But overall, I just wanted to use this video to share what's been on my mind for ages and break aside any long-term myths. And yes, people ask me for long-term projections. Where will it go next? What will it do next? I mean, just use your head, guys. You don't need to be worrying about where it will go next, because once it breaks out and goes on the next parabolic run, we have seen how history repeats itself. If I use this, which was the first bull run, and then we use this as the next bull run, again, very realistic. This is essentially exactly what's happening. Let's just say 2020 around there. Well, if I dip this even lower, around there, and we extend this out again. Let's extend this out one more time over to here. Now let's just say we dip down to this level. From there, we've dipped to there. Now we start from around there. Let's push that a bit higher. What could essentially be occurring this time if we just simply double this? Well, it's very simple to look at when you actually look at it from this perspective. It's just a reoccurring market cycle, up, down, push, sink again, bang, even higher. And what essentially will be occurring from that point onwards, the beauty is, talking of higher highs and higher lows, the last real swing low that we would need to breach to actually fully catastrophically demolish this market would be around this region. But what happens if we do just have a very sharp parabolic spike to the downside before surging higher? It still would not invalidate the trend. Hence how it occurred here at the very lows. We never actually breached these levels. We simply tapped it with a very large spike, and then we absolutely reversed to the upside. And I've seen very similar movements. Ether in 2017, when it was on its massive bull run, arguably kickstarting the bull run for me as well, besides XRP once it got a bit later. But seeing Ethereum's rise around March, I believe it was in April or May, I remember price just absolutely dropped down to like $20 from like $200 or $300, and then it just spiked all the way back up to the upside to wipe out many people. Could be a very similar incident to this. Again, stop out all the long buyers who expected what would have been a major market surge, and it wiped them out, carried on its merry way. And I do believe this could be unfolding very soon as well. So again, it's been on my mind for a while. You guys have been asking me so many questions. Where will BTC go next? It doesn't matter where it will go next. It's about wondering where it will be in a matter of months and a matter of years. What is the future? What is the overall trend? Where is this market headed? Well, I'm hoping this video has cleared up a lot of questions, a lot of thoughts. I hope it's helped slightly better with even your technical analysis and understanding the overall factor and play of trends, because what you could be seeing right now, using this level in consideration as well. Last spike from this level, spiked up to this level as well. Similar movements, spiked, pulled up, spiked, could absolutely fall. So where it goes in the short term for me does not matter. What matters to me right now is what could potentially be a huge downside surge, a potential retest maybe, around $6,000, who knows, and then a dip back. But overall, I believe this will and can potentially go much lower. And until I see a break of this level, we are not in a bullish market. And until then, we should be using factors like the Fibonacci into consideration, using the extensions. They line up so perfectly. It's almost too dangerous to ignore. So taking all these factors into consideration, we could be in for a very interesting year. But regardless, guys, have a great evening. I hope you've enjoyed the video. And if you want any more videos like this, just let me know, because I absolutely love doing these and sharing different insights and potentially even controversial insights into the market as well. It doesn't always have to be bullish. It's good to be logical and perspective as well. So guys, I'll see you in the next video or in the Telegram.